Pump effect on the economy. Persistent capital outflows threaten Hong Kong's economic stability. Shrinking financial markets. Hong Kong stocks lost $4.6 trillion in value in 2023. Further outflows could cripple corporate financing, especially for tech startups relying on IPOs. Bond markets face risks. Rising borrowing costs may delay major projects like the Northern Metropolis. Linked exchange rate pressure. Large-scale outflows force the HKMA to use forex reserves. Stars time spent in 2020. Limited reserves could weaken confidence, risking a currency crisis. 1998's 300% interbank rates. Industry chain breakdown. Consumer and service sector decline. 2024 retail sales fell 7.3%. Wealth loss among the middle class from falling stocks property could crash luxury spending, leaving malls like Harbour City empty. So real estate collapse. Home prices dropped 15% in 2023. Reduced land sales, 20% of fiscal revenue, may trigger a cycle. Fewer sales, less infrastructure, weaker economy, lower prices. A repeat of 1997's 70% price plunge could spike household debt and bank defaults. Labor market and social strain. Job loss versus foreign labor. Unemployment may hit 4% by 2025, 5-7% in construction. Adding 10,000 mainland workers could displace local jobs and suppress wages. Wasn't in capital flight. Top financiers may move to Singapore, 20% asset growth in 2023. Mainland inflows via Stock Connect dropped 20% in 2023, signaling weak confidence. Threat to financial hub status. Weakened offshore RMB role. Handling 70% of global offshore RMB trades, Hong Kong risks losing business to Singapore, London if liquidity dries up. And regulatory risks. Frequent market interventions, banning stock buying could trigger credit downgrades and higher borrowing costs. Policy challenges or fiscal limits. A 2025 budget deficit leaves tough choices. Raising taxes risks unrest. Borrowing faces high interest rates. Monetary constraints. Tied to U.S. rates. Hong Kong cannot cut rates during a recession, worsening economic cooling. Turning crisis into opportunity. Without action, Hong Kong risks becoming a dried-up pool. Solutions. Short-term. Limit foreign labor, e.g. Singapore's 15% cap, to protect local jobs. So mid-term. Boost fintech and green industries to attract capital. So long-term. Integrate with the Greater Bay Area. Expand cross-boundary wealth management connect. Breaking reliance on property finance and building a knowledge-driven economy is key to revival.